Inclusive with an eye to what it perceives to be a structural rise in stock markets, the country's premier pension fund, the EPFO, wants to commit more money to the markets. Yash Jain is here to help us understand just why. Yash, is it going to be easier now for the EPFO to do this?
Well, it has never been an easy ride for EPFO to hike its equity investments, and in all possibilities, that story will play out one more time. What we're given to understand from our sources is that the Central Board of Trustees, or the CBT, which is the apex decision-making body of EPFO, is expected to meet at the end of current month or early next month, which is early October, and on the agenda would be two important proposals which will come up for discussion. What we are given to understand from our sources is that EPFO is likely to discuss and consider the proposal to hike the equity investment bracket from the current 5 to 15% and take it to 15 to 25%, where 15% would be the minimum equity investment which EPFO will be mandated to make, and 25% of course would be the maximum threshold which will be set here. We are also given to understand that EPFO is also likely to discuss the proposal to hike the absolute equity investment figure from the current 15% and take it to 20%, and on the back of this equity investment hike, EPFO expects to invest an incremental of 25 to 30,000 crore rupees annually in the equity ETFs, which include Sensex ETF, Nifty ETF, as well as CPSE ETF. I'm also given to understand from my sources in the employees' representatives, which are an integral part of EPFO, that they will only approve this proposal of hiking the equity investment if it is followed by an approval for the exit policy which they have proposed, which according to them will safeguard their equity investments. So yes, it is going to be a difficult ride, and in the past, if you see, the government has had its way in terms of raising EPFO's equity investment limit. We'll have to see how the situation really pans out under the new Labour Minister.